the asset reason codes, and then we discussed about the creation of fixed asset. So let's see about creation of fixed asset one more time, and we'll go into one of the very important configuration today, which we call as fixed asset posting profile. So before that, we'll just see fixed assets and fixed assets and fixed assets. Three steps where we have created a fixed asset yesterday. Let me go in here. There we go. So we created this fixed asset yesterday. Vehicle number one, naming Benz truck. If I open this, we have seen some details we have filled in this particular. We also discussed about this menu details, which are maintainable fields in this my asset master. And then you can normally go from here or anywhere. You can see what are the books that are linked to this particular fixed asset. These are in this area. You can see the books. So when we link books to the fixed asset group, automatically that books will be showing up on the fixed asset. Once you create a fixed asset and you link the group anywhere to the fixed asset. There are three books for this fixed asset: Companies Act book, Local Gap book, and Tax Act book. So when you look into the structure of the book, suppose I'm editing this one, you can see here. It is asking, so the book name, okay, posting layer is current layer. So round of depreciation, everything will come from the book level. Yellow net book value higher than acquisition cost was there earlier. Yellow negative book value is there earlier. And you can see something here, asset status. Asset status is showing as not yet acquired. Not yet acquired means we did not post a acquisition transaction yet on this fixed asset. So that is why it is showing as not yet acquired. But you can, if you acquire it, it will show the status as open. And if the depreciation is completed, it will show other status as closed and suspended. So we'll come back to this page again. And you see one compulsory thing that has to be assigned here is posting profile, but we did not configure the posting profile, which we are going to do today. Once we configure it, we can assign the posting profile here in the book level, or it will automatically appear here in the book level. Actually, if at all you configure and assign it in the fixed asset parameters, automatically it will be picked as the default fixed asset posting profile. Then you can give further details like when the asset is acquired, you can give what is the acquisition date of the fixed asset. Suppose say like January 1st, and how much amount is the acquisition price. This affects the financials. In case if you give it something here, you can say like 1 lakh is the fixed asset value. Acquisition method, actually you can create some acquisition methods and give one if you want to, but normally we will have our own ways of acquisition, which we will discuss further. Then disposal date, in case if it is sold, how much sales value, if it is sold means how much amount you have generated for the sale. Replacement date, in case if this asset is being replaced. If you create any provisions for this, you can give the details of the provisions for fixed asset. Then you have depreciation details here. Straight line service life method is what we have, which we gave it in the Companies Act book, and I can see it here. Then the alternative depreciation profile, extraordinary depreciation profile, we did not go for them. Calculate depreciation, yes, and you have a date called as placed in service date. After acquiring the fixed asset, from which date the asset is put into service for usage, that date is considered as placed in service date. Generally, the depreciation will be calculated on the fixed asset from the placed in service date, from the date when the asset is placed into operations. So from that date only asset will be depreciated. If you buy a fixed asset today, and if you are started using it only from February, so depreciation deduction will start only from February. That's how. So generally you can have the placed in service as same as the acquisition date, or you can have some 4 or 5 days after the acquisition date, or 10 days after the acquisition date, or we can't say. So there can be anything. So generally depreciation run date means from which date depreciation has to start will be guided by the placed in service date. Both of them would mostly be the same. Whenever the placed in service date is there, accordingly the depreciation run date will be there. So from that date depreciation will be calculated. But if you want the depreciation to be calculated from the next day, you can also give that next day. So that depreciation will be calculated from this day. But generally, both of them will be the same dates, most of the cases. Then date when depreciation was last run. In case if you depreciate this fixed asset for the month end January, you will see that 31st January here. So that would be the month end date. So from which date you had last run the depreciation on the fixed asset, that date will appear here. Again, if you run it for February, you see the February date here when the depreciation was last run on the fixed asset. And service life, service life of the fixed asset is showing as 5 and 60 periods. 60 periods. Expected scrap value, you can give the salvage value of the fixed asset. So we have discussed earlier how to depreciation always deducts the salvage value from the net book value of the fixed asset. So that salvage value you can give here expected scrap value. Convention concept, yes, we will discuss more on this once we acquire a fixed asset. Okay, depreciation convention. Then allow depreciation when placed in service and disposal dates are in same fiscal year. This is a kind of parameter which is useful for certain countries. So when the asset is placed in service in this year and we are selling the asset off in this year, some people don't want to calculate depreciation on the fixed asset on the in the year which they are selling. So in that case, they can regulate calculation of depreciation, which they calculate on a yearly basis. They would regulate the depreciation calculation by enabling this parameter. Allow depreciation when placed in. So normally, if they want to allow this, yeah, they will allow depreciation. If most of the cases they don't calculate depreciation on the fixed asset if it is bought and sold in the same year generally. So this by default will not calculate depreciation in case if it is a yearly depreciation pattern that they are following. If the asset is bought in the same year and sold in the same year, then depreciation will be normally run at the end of the year, right? In case if it is yearly depreciation, then there won't be any depreciation calculated. But if you want that to be calculated, then I think you can enable this parameter. When you are selling it, the depreciation will be evaluated and reversed automatically. But most of the times it will be disabled itself until and unless they require it specifically. According to Indian Acts also, there won't be depreciation calculated on the fixed asset that is sold within the year. That's also there. Then create depreciation adjustments with basis adjustments. Yesterday we have seen this. When if there is any acquisition adjustments made in between and after running the depreciation, then that will be adjusted and depreciation also will be calculated for the previous period where the acquisition adjustment is done from. So we'll see that example in with practically by applying something. Extraordinary depreciation date, in case if extraordinary depreciation is run on the fixed asset, you can see it. Then purchase or sale, in case if you buy a fixed asset from a purchase order, you can do that actually. You can acquire a fixed asset through a purchase order, which we're going to discuss. So then you will see that vendor from whom you bought the fixed asset, the purchase order number and the invoice number. You can also sell a fixed asset through a free text invoice. In case if you do that, you can see that details here, to which customer you sold it and to which invoice and the invoice number here. And you can give default financial dimensions here, like you can give business unit as Hyderabad. And you can give some cost center if you want to. Department, in case if it is operation department, you can give the same. That's all. The same way you can see for tax act book, but this will not allow us since the posting profile has to be configured. So the same details you will have in the tax book as well. Now it will not allow us until and unless we assign this posting profile. So let's do something. Let's create the posting profile concept. Actually, I wanted to show you other details as well. Anyway, we'll come back to see these details. Now let me go back to, I'll just go to view details. So it will take me to the posting profile page. This one, or I'll go to fixed assets, setup and fixed asset posting profiles here. Fixed assets, setup and fixed asset posting profiles. Actually, this should be the first configuration before we create a fixed asset. But since yesterday we thought that the time wouldn't support to configure a fixed asset posting profile, so we discussed about the creation of fixed asset first, and now this is the posting profile. Then let's create a fixed asset posting profile here. So one posting profile would be enough for fixed assets. And just click on new. Okay, name of the posting profile. I can just give it as CFA, PFF fixed asset posting profile, or you can give it a general fixed asset posting profile, anything. Fixed asset posting profile. Then before I configure any accounts here, I just want to understand from you what are the different accounting entries for the transactions that are posted on fixed assets. Let's say suppose if I'm acquiring a fixed asset, what will be the accounting entry for the acquisition of fixed asset? Will be what will be debited and what will be credited when we acquire a fixed asset. Fixed asset will be debited and cash account will be credited. Other than cash account, any other accounts? If you buy with cash, okay, cash. If you buy with bank, okay, bank. If you buy it from a vendor, if I buy it on from a vendor on credit basis, vendor account will be credited. So the offset account when you are buying a fixed asset is unsure. It depends on the situation. So if you are buying it from a vendor, vendor account will be credited. If you are buying it with cash, cash account will be credited. Or sometimes you can also use your retained earnings account, the amount of balance that you have in the retained earnings. Again, that will be also there in the bank only. That's how. Fixed asset account is constant. The fixed asset account will be debited always. So the offset account will alter or change depending upon the situation. So this is the entry for acquisition of fixed asset. The entry for depreciation of fixed asset. Okay, depreciation of fixed asset. What is the entry for depreciation of fixed asset? Depreciation will be debited. Depreciation or depreciation expense. So depreciation is an expense actually. So either it is naming as depreciation or depreciation expense. Expense is always debited. And then fixed asset account. Fixed asset account will be credited. So this is correct only. Fixed asset account will be credited. But generally in business, since you have this going concern concept wherein the continuity of business is there. Sorry, I mean the business is looked in the long-term perspective. So generally the fixed asset will not be decreased or the asset value will not be decreased at the point of depreciation. Until that, we will use another account. So most of the businesses will use this account called as accumulated depreciation account. So this is a liability. Asset value will stay as it is in the balance sheet, and this liability account will be created on the other side, or maybe you can also create it on the asset side also with a minus value as accumulated depreciation. Generally, it will be recorded on the liability side. So depreciation expense will be debited, and instead of reducing the asset value, a liability value will be increased. Accumulated depreciation value will be credited, and that would be recorded on the balance sheet as a liability. Your fixed assets will always be there on the asset side, right, in the balance sheet, and the accumulated depreciation account will be there on the liability side. So what happens with this is at the end when you are going to close the fixed asset or sell off the fixed asset, then this accumulated depreciation account will get reversed, and then entire fixed asset account will be credited. Then what happens is this will get debited generally at the end when you are selling the fixed asset, and then your fixed asset account will get credited. So as long as you run the depreciation for the asset, so you will have this entry only all the time. Depreciation expense will be debited and accumulated depreciation liability will be credited. So if the accumulated depreciation at the end was like some 10,000, which was entirely credited for this fixed asset. When you are selling of the fixed asset, that 10,000 will get reversed and the accumulated depreciation liability will disappear from the balance sheet. As well as on the asset side, the fixed asset account also will be reduced. Since the fixed asset will disappear from business, from the balance sheet also it will disappear by we will credit the fixed asset and reduce both the values of accumulated depreciation and fixed asset. This is what happens at the time of sale of fixed asset. Until you sell the fixed asset, this would be the only entry that you record along the years when you depreciate the fixed asset. I have some one more concept. What concept? It's not concept, just have some other things like write up of fixed asset value. So what happens if you write up fixed asset value? So generally when you write up fixed asset will be debited. Some value of fixed asset will be increased. And what will be credited? You can credit to some miscellaneous account like write up reserve. Right. For write down reserve account will be created. That will be credited. So it's a dummy account actually, but is maintained under a, I mean, depends again. It has to be maintained as a P&L account or not. So that's how this write up will be done. Write down means generally the fixed asset account will be credited. The value of the asset would be decreased and the write down reserve or something, whatever write up write down reserve which we create as a common account will get debited. Then we have one more concept called as acquisition adjustment. Acquisition adjustment means adjusting some more value on the fixed asset. Suppose if I am buying a car today, the car value costed 1 lakh. So I posted acquisition transaction for the car like this. After 1 month, I have installed that safety system for the car, for the glasses as well as the bumpers to the car. Install them, though it costed me another 10,000. So that 10,000 also is an addition to the asset, right? So it gives some protection to the asset as well as it adds value to the fixed asset. So we have to make that adjustment what we have added to the fixed asset. So that entry also we can post as acquisition adjustment on the fixed asset. So that is called as fixed asset acquisition adjustment. So when you are doing any acquisition adjustment entry also it will be the same entry. Asset account will be debited when you are making any adjustment. If you are increasing the value, then asset account will be debited and either the cash bank or vendor from whomever you are buying that additional equipment, that will be credited at that point of time. So that is what we call as acquisition adjustment. So why I'm saying you this all these entries now is we have to configure the main accounts related to all these things here in the posting profile which we are going to create now. So I want you to understand why we are giving the accounts here in the main account level or in the offset account level. Only once you understand these entries, then you can better understand which accounts will be debited and credited at with these levels. Okay, now let's try to configure this posting profile. So when I create a fixed asset posting profile, I can see different transaction types here. Acquisition adjustment, depreciation adjustment, revaluation, write up, write down adjustments, disposal sale, disposal scrap, provision for reserve, transfer from reserve, extraordinary depreciation, special depreciation allowance. Not all of them are related. I mean, uh, most of them are common in business actually. We are not going to discuss everything. We are going to discuss about the acquisition first. Suppose if I click on add here, you can add a book. It is a compulsory thing. You have to add a book. For which book you are giving the main accounts here. So for the book, Companies Act, I have Companies Act and Tax Act. The other book is also there, but we have disabled the parameter to post it into general ledger, right? So there is no significance for that to give main account for that book, local gap book. So that won't show up here. Only for the books for which we are posting into general ledger may it be into any layer, tax layer or current layer. If we enable that parameter post to general ledger, then only you can see the two books here. I'll select this Companies Act book. So again, group wise you can give relation, or for all the groups you can give the same accounts. Generally in business they'll maintain individual accounts for each group. Suppose here I'll select group. Group means I can select fixed asset vehicles group. So for all the fixed assets under vehicles group, I can give the accounts related to them for the only acquisition transaction. Whenever I acquire, which account should be debited and which account should be credited, I can give it here. Or you can also use table option. Table means for single fixed asset you can give actually. The field relation must be filled in. Yeah. So only one fixed asset it is showing. But it is not for each asset you cannot create posting profile because there will be thousands of fixed assets in business. So for each asset you can't create. So group wise you can create, you can give accounts here. So book, group, vehicles group, then main account. Main account that we have to give here, whatever is debited mostly will be given at the main account level. Whatever is credited, sorry, not debited and credited actually, instead of asset, instead of the fixed asset, which account will be used, that will be given in the main account. See, when we acquire fixed asset, instead of the fixed asset or behind fixed asset, this account will be there, fixed asset account. So that will be given in the main account level. Again, when we are depreciating fixed asset, accumulated depreciation will be credited instead of fixed asset initially. So if accumulated depreciation account will be there in the main account field here. When for different transaction types, we have different accounts. So for here, I'll give the main account as vehicles account. So I'll just create that vehicles asset account or fixed asset account, and I'll give it here. For all the groups, if you are using same account means you can also use, or you can create a single fixed asset account and use, but in books also we have to show them separately, right? So that is why we'll create separately. So fixed asset number, I will start it with 1600 series on 1,60,000. FA vehicles, or I can give any name, vehicles fixed assets or vehicles assets, fixed asset vehicles can give. So this will be here, then it is asset account, right? Can give, and you can also use this option, do not allow manual entry. Since this is being linked in the posting profile as an interim account, you can use it. So this account 1,60,000 is added here. Offset account, I am not giving any offset account for acquisition. Since I said that acquisition offset account for acquisition would generally differ or change depending on the situation. So you can pick it up at the transaction level, whatever account you want. Okay, so that could be done. So we would discuss that at that time of posting acquisition entry. Okay, so of leaving the offset account as it is. So also for the tax act here, again I'll select the group. Again, I'll select the same group, fixed asset vehicles, and I can give the same account here, 1,60,000. Offset account, I can give anything since it's a tax act book, something like cash account or bank account, anything. Or I can also leave it as it is without UVM. But since it's a tax act book, I think I can give this account, or I can give some dummy account for the tax act. Anything I can do with the tax act book, because the accounting in the tax act book doesn't really matter, but representation of fixed asset values in the fixed asset module really matter for the tax act book. Okay, this is how we can configure posting profile for acquisition. So for acquisition adjustment also we can configure. So here you only configured for one group. You have to configure for every group. Again, for furniture you have to configure. Machinery, if you have to configure the main account separately. For furniture you can create another main account called as furniture fixed asset or fixed asset furnitures, and you can link that account by creating the group. We'll also do that. Let's see. Companies Act group. I'm selecting this one, furniture, FA furniture. Just create a main account quickly. Thousand and one FA is also an asset, and save it. Then copy this, close it, give it here. Then you can add again. This time you can select the tax act book, select the group, furniture group. Again, you can give the same account. You can see this and refresh it. There we go. So for Companies Act and the furniture we have given, for Tax Act and furniture we have given the accounts. So this is compulsory configuration. Without configuring a posting profile on the accounts related to it, you cannot proceed further for posting any transaction related to it. Whatever the group you have to give that. Or you, instead of group, you could have given all, means for all the fixed asset, it will take the same main accounts. But here group wise we can divide it, which is a correct way or the most common practice, where dividing group wise and giving main accounts group wise. So then we'll go for the acquisition adjustment entry. So here I have acquisition adjustment. I'm just selecting another transaction type, acquisition adjustment. For that again we have to give main accounts. So again I'll add the same, I'll select Companies Act book, group, and vehicles group. So main account, what is the main account guys for acquisition adjustment?
Same fixed asset.
Same fixed asset account, 1,60,000 vehicles account, right? Fixed asset vehicles. Perfect. Again for tax act also I'll give it. Again group. Again fixed asset vehicles. 60,000, and I can give offset account for this one. Actually, I'll show you why I'm giving offset account for this tax act. So Companies Act book again, group, this time furniture group, 1,60,000 on one, and then tax act book, group, furniture, 60,001. And here I'm giving this offset account as cash account. Save it. Perfect. So any confusion in this for anyone? It's clear, right, for all of you?
Exactly.
Okay. Then let's proceed with depreciation now. So for here we have this option called as depreciation. Click on depreciation. Again, it's empty. We have to configure the main accounts related for depreciation. So click on add, select which book, Companies Act book. Again, the group, which group, vehicle group, main account for depreciation and offset account. So here you can select accumulated depreciation account, accumulated depreciation vehicles. You can create separate account, or you can create one accumulated depreciation account and use it for all of them. Up, up to you. If you are creating and using only one accumulated depreciation, you don't have to select group here. You can select all. Then the same account can be used for all the groups. But in business, they'll maintain separately accumulated depreciation for each asset. Again, depreciation expense account would be common, but accumulated depreciation account, they maintain separately accumulated depreciation vehicles, accumulated depreciation furniture, like that. So here I'm going group wise only for that. Going for vehicles, selecting, creating a main account quickly. Create new. So accumulated depreciation is a liability. So I'll just create a liability as 2,40,000 accumulated depreciation vehicles separately. If you want, or you can maintain a single account also. I'll just maintain single account and create accumulated depreciation, and I'll create it as a liability account here, and I can 2,40,000, right? Let it be, and I'll create depreciation account, depreciation expense account as well. Since it's an expense account, I'll go with that 5,60,000 depreciation expense. That is expense account. Save it. Then I'll go back here, Can give the main account as accumulated depreciation account. Show all since it's not refreshed. And offset account will be depreciation expense. Which means like whenever you are depreciating a fixed asset, instead of fixed asset, this accumulated depreciation account will get credited and the depreciation expense account will get debited. So whatever is there instead of fixed asset, that should be given in the main account. Okay, same for the tax act also you can give. So you can select a group, same vehicles group, and create this account 1,40,000 accumulated depreciation. The offset account as so. And again for the other group also you can give vehicles furniture. You can create separate main account, accumulate depreciation furniture and maintain, or you can use the same account which I'm doing it here. Perfect. So that's how we can configure depreciation posting profile. Accumulated depreciation account is given in the main account, which is a liability account, and depreciation expense is given in the offset account, which is a expense account. So again, we have another transaction type called as depreciation adjustment. Depreciation adjustment is also the same as depreciation. If there is any additional depreciation has to be made, or some depreciation that was already made has to be reduced, you can use this option. So select Companies Act, Group, Vehicles. You can use the same accounts, accumulated depreciation and depreciation expense account here. See, Companies Act. Actually, you can upload this using an Excel file also. When everything is in proper place, we have a template to upload fixed asset posting profile as well, which would be easy. You can configure it in one legal entity and you can copy the same for other legal entities. In case if you are using same codes of groups and all, same codes of books and same codes of groups, you can copy them into another legal entity easily. Export it from this legal entity and import it into another legal entity. And you can also copy it from the legal entity. So that's how. And you can also create again this for revaluation, write ups and write downs. So we'll come to that point again when we have to post such transaction. We'll configure the main accounts related to that transaction types like write ups and write downs. For now, let's complete or let's work with this particular transaction types acquisition adjustment, then the depreciation and depreciation adjustment. Okay, so I configured this posting profile. The next prerequisite is that you have to link this posting profile in the fixed asset parameters, just like how we link the accounts payable and accounts receivable posting profile in the parameters of those modules. In the same way, you have to link this posting profile here in the fixed asset parameters. So parameters are also under setup. Here you have fixed asset fixed asset parameters in the first menu. That's okay. Here, so that's okay. First, let me fill it here for this one, as well as for this one. This asset is not allowing me to go further. So for this posting profile is not required since this is local gap book and not posting into general ledger. Now I'll go back to fixed asset parameters. Once given in the parameters, it will automatically come onto the books actually. So here, where is this posting profile? Here we have fixed asset posting profile. Save it. Okay. Then the asset whatever you create further, it will automatically take this posting profile. So that's how we configure the posting profile and link it in the fixed asset parameters. Now let me go back to the fixed assets page again, where we have created this fixed asset number one. So now for this fixed asset, earlier we have seen this option called as books. We can edit this, we can create new fixed asset from here. We can delete the existing fixed asset in case if you don't have any transactions on that fixed asset. Then you can also go for valuations. Let's see what is there under valuations here. If you click on valuations, it shows a representation of asset balances. See, asset photo is here actually, picture. Then the three books. According to Companies Act book, what are the values of the asset? Acquisition value is how much, adjustments are how much, then depreciation is how much, adjustment is how much, and you see everything is zero. Net book value, how much you can see here. Zero because you did not acquire the fixed asset yet, right? So that's why you see zero. If you acquire and post some transactions, you see them definitely. And you see local gap also. Everything is zero here and here. So it generally shows you the balances. You can also see the profile actually. Profile here, you can change it. So this generally shows the depreciation amount. So for the Companies Act, we have given that 1 lakh rupees, right, in the acquisition. So it is automatically showing the depreciation profile for every month, how much it is calculating. It's calculating right or not. Let's see. It's very easy to check. So calculator 1 lakh, right? So the assets and net service life is 5 lakh, sorry, 5 years. So 1 lakh divided by 5, 20,000 divided by 12. For year it is 20,000. For month it is 1666. So 1666.67. That's what it is showing here. So if we give as acquisition value for the tax act also, then you will see the tax act, according to tax act, how much it is depreciating on monthly basis. Let's do that. For that, you have to, if you have to give the acquisition value, you have to go to books again here. In the books, you have the tax act book, right? This one. In the tax act book also, you can give acquisition value here as 1 lakh. Acquisition price as 1 lakh. Without posting any acquisition transaction also, you can see the representation of depreciation. Okay, you can see here, and then you can go back to valuations once again and go to profile. Here, according to tax act, it is reducing balance 20%, right? I forgot to give this one as the acquisition date. I'm sorry, wait a second. Books, tax act book, acquisition date should be 1st of January. Okay, then let's see, and this date is also 1st of profile. There you see, here also you're getting the same actually. In the tax act book, what we have given, the post reducing balance 20%, right? Okay, that's then changing, reducing balance 20% actually. 20% in the sense, again, it is calculating the same 1 lakh. On 1 lakh, it should be 20% for a year. So 1 lakh into 20%. 1 lakh into 20% is 20,000. Again, divided by 12. It is, sorry, it took into, I think, 12. It's the same value will get 1,66,000. But after completing 1 year, you see there is another value, depreciation, 133.33. So this is a different calculation. It would calculate the balance on the existing net book value of the fixed asset. So for the year, it is calculated as, so from the next year again the net book value will differ, right? So on that 25%, 20% will be calculated generally. But whereas it comes to straight line service life method, every year you have the same, every month you have the same depreciation amount. It is slightly different compared to this book to that book. Straight line method, you have same value every year and every month. Whereas it comes to tax act book, you have this one. You have 20% reducing balance, so it differs from year to year. It gets reduced or written on value, right? So the value will depreciation amount of will get reduced by year actually. We'll see more about this depreciation once again. I just showing this menu of valuations. Again, you have a menu called as fixed assets where you have different options in here. We have one option which is very interesting called as copy fixed asset. Copy fixed asset is one option which would, as it is, copy this fixed asset as another fixed asset. Vehicle number 2 will be created, but the details as it is will be copied. The details in the master level, the details in the book level, everything will be copied. Let's see how. Suppose if I click on this asset and click on copy fixed asset. Here, clicked it. Vehicle number 2 is created. And you see the same name, Benz truck is taken. I'm just changing it to Benz truck 2. Let's open it. Every details, the unit costs or the details like here, model and insurance details, all of them, whatever you have filled, everything will be taken automatically. As well as in the books also, it will take the values as well. See, acquired date, it is taking as January 1st and 1 lakh is taking as acquisition price automatically. From that, for the tax act also, it is taking the same. It copies all the details from that asset to this asset. As it is, it will copy and create new fixed asset. That's how copy fixed asset works. In case if you are buying multiple assets of same category, like suppose if you are buying 100 computers at a time, and if you want to maintain each computer as a separate fixed asset, then you can create one fixed asset computer first, give all the specifications in the master level as well as in the book level. Select it and click on copy. You can copy the same fixed asset like 100 times. But every asset will have its unique number. Name will be the same, right? Anyway, the same computers with same configurations and details and same acquisition price and acquisition date in case if you have the same. So that's how this copy fixed asset will help. Then we have change fixed asset group, which is a little advanced concept, which we're going to discuss further when we have multiple assets. So this topic will postpone to, I mean, the further class, maybe after creating transactions on the fixed asset, then we will talk about this change in fixed asset group. Or acquiring one fixed asset, then we will talk about this one. Then you have some other options called lend, transfer, and review, which we'll see that same time. Lend, fixed asset additions, and all. We'll see it. Other than this, if you go into books here in the books, you can also see here transactions. For the Companies Act, if at all you have posted any transactions, you will see them here. Transactions. It's empty here since we did not post any transactions, neither the acquisitions nor the depreciations. Without acquisitions, we can't post depreciation, right? So that we'll see here for every book again. So these are separate. For Tax Act, you see Tax Act transactions, but we don't have any yet, so we don't see now. Then you have balances. So for each book separately, you can see the balance. Earlier you have seen, right, the valuation. Same way you can see here balances for Companies Act book, acquisition price and the placed in net book value place and the remaining details within. What are the adjustments you have done for the fixed asset? Everything you can see here under balances. Again, you can see profile separately for this particular book only for Companies Act book. See how depreciation is calculated and the accumulated value for each month. So for first month, it's this. For 2 months, the combined value is this. For 3 months, this. And for the year, 31st December, it's here. Total 20,000. And net book value of the asset is reduced to 80,000 when you reduce the 20,000 from 1 lakh. So just so showing some cents values. Okay. So that's how asset will be depreciated. At the end of 5 years, when you see it, 31st December 2026, asset value is changing to 0 or totally depreciating. But if you want the asset value to have a net book or scrap value, sorry, salvage value, you can give that salvage value here. There is this expected scrap value. Suppose I want this asset value to stop at 10,000. I don't want 10,000 to be depreciated. Only 90,000 of the asset value will be depreciated now. Depreciation base amount is 90,000. Okay, then what should be the depreciation amount? So generally it's 1 lakh minus 10,000. Acquisition price minus scrap value divided by number of years. So 90,000 divided by 5 under such straight line service life method, which is equal to 18,000. 18,000 on monthly basis means divided by 12 again, 1500 every month. So for the first year. So let's see. Not for the first year, for the entire periods it will be the same. So if I click on save here, then if I go to profile again, so it is 1500. 1 lakh is the net book value, but out of which depreciation base amount is 90,000 only, right? So 90,000 divided by 5 years, 18,000 every month. 18,000 divided by 12, 1500 every month. So 18,000 every year and 15,000, 1500 every month. So that's how you have it. At the end, from the final depreciation period, you have 10,000 left over for the asset. So this will not be depreciated further. 10,000 value. That's how you can give it. So according to the salvage value that you give, the depreciation calculation would differ. The same way to come tax act book. Generally, if you go to transactions, sorry, not transactions, profile, you see here depreciation is there and accumulated depreciation is there. This is with the net book value of 1 lakh. Suppose if I also give scrap value here, like 10,000 for this one as well. Then if I go to profile, so then slightly it would also change the depreciation calculation. So it is also changing to 1500 for the first year. For the next year it will differ again. So how different it is, see if in the first year actually we have 90,000 into 20%. Into 20% is 18,000. It's 20% reducing balance we have given. So 18,000 is the depreciation calculated. It will be divided by 12. Sorry, 18,000 divided by 12, actually 1500 only monthly. What you have. And after reducing that 80,000, 18,000, the net book value will be 82,000. And from that 82,000, we will take off that salvage value of 10,000. So the depreciation base amount for the next year will be 72,000. So again, 72,000 into 20%, 14,400. So again, it is divided by 12. Sorry, 14,400 divided by 12. Divided by 12 is equal to 1200. So you see 1200 here for the next year. Again, the third year ending here, it is 67,600. So 67,600 means the depreciation base amount is 10,000 less than this. So 57,600 will be the depreciation base amount. So again, 20% on this, 11,520. So 11,520 divided by 12, 960. See 960 here for this year. So that's how reducing balance works. Okay. Hope this is clear for you until here, what all we have discussed. And I'll show you one more small thing. Suppose here in the Companies Act book, I said that we can give alternative depreciation profile also. Within one book only we can maintain two depreciation profiles. Here I gave straight line service life. Here in the alternative depreciation profile, I'll give another depreciation profile like this one, 200% reducing balance method. Okay, and I'll save it. Then let's see the profile, what happens. See in the profile, you see primary depreciation profile and alternative depreciation profile, both of them. Primary and alternative. And what system is picking here for depreciation is the whatever is the highest amount is there in comparative to these two profiles. So which in alternative depreciation profile you have 3000. Actually it is 200% reducing balance, right? 200 into 5 years. So the depreciation base amount is 90,000. 200 divided by 5 means you have 40%, right? Every year 40%. So into 40%, 3,000, 36,000. So 36,000 divided by 12 actually, you will have 3,000 every month. That's what you have here. So the thing that you have to understand is if at all you are maintaining two depreciation profiles in a single book, like primary depreciation profile and alternative depreciation profile, system would consider the depreciation value of in whichever book it is calculating higher. So system would consider that value for depreciation. You can see depreciation amount is taken from this alternative depreciation profile where the amount of depreciation calculated is more compared to this. So here also accumulating this particular area also it is taking the same. And when you scroll down a little for the next year, you can see in the next year also depreciation is higher on the this side only, alternative depreciation side. When you go to the next year, 2024 from January, but you see here the depreciation is consistent since this is a reducing balance method, 200% reducing balance method, depreciation value is reducing year by year. But whereas it comes to this one, it's a straight line service life method, right? It will be consistent. When you come to 2024, the depreciation on the primary depreciation profile is higher than the alternative depreciation profile, unlike the earlier years. So then you see the system is considering whatever is higher here. In both of them, the comparison higher is this one, our primary value, primary depreciation profile value. So that is being considered here. And that will be reduced from the asset, whatever is the existing net book value of the asset. Out of that, this 1500 will be reduced. And you see at the end, so only this will be considered because this is the highest amount. That's all. So in case if client want to use both the depreciation profile, do not forget this logic that system would pick whatever is the highest value in the both the depreciation profiles that are provided in the book, in the single book. Okay, it's not usually they maintain two depreciation profiles on a single fixed asset. I mean in the single group. They don't maintain two depreciation profiles. If they have to, they will maintain two different books. But Dynamics provides that flexibility to maintain, as well as this is how the logic works. If at all they maintain the alternative depreciation profile. I'll just remove this. I don't need this alternative depreciation profile. And if I go to profile again, it will not show up. See, only one depreciation is showing since I only have one profile.